Very warm welcome to you wherever you're watching us from or listening to us. This is the Business Hour podcast where we get to discuss everything business. You can always find us on our social media platforms across at the Business Hour podcast. But before we get into today's discussion, here's your business tip for the day. And it says, business opportunities are like buses. There's always another one coming. That is by Richard Branson. And today our focus is on SME and particularly the role of SACCO societies and other organizations and cooperatives, the role they get to play in SME growth in the country. And we have none other than Peter Njuguna, the head of SACCO supervision at SASRA, the regulator, who will be giving us some of the tips and what you need to be looking out before joining a SACCO and how that SACCO is supposed to help you grow. Peter, thank you so much for taking the time and for joining us for the very first time. Karibu sana.
Thank you very much for having me.
All right.
Glad to be here.
All right, let's get straight into it. And then my first question to you is the fact that what role do SACCOs play in SME growth?
Thank you very much, Jimmy, for that question. First, SACCOs by themselves are SMEs.
Yes.
They are small. You'll find them in all shades and forms.
Yeah.
And therefore, they are SMEs, financial service providers. Their role, if you step back and ask why SACCOs were formed, essentially they were formed to fund small and micro enterprises. And these are individuals who come together to fund their own small activities, both businesses, maybe agriculture, and also for their home consumption. Because ordinarily banks will not give you a loan to go, take your child to school, unlikely. That's consumption. But SACCOs essentially look at the personal and business needs of individuals. And therefore, Kenya, we know that the SMEs, and especially small and micro, are the drivers for this economy. And therefore, that's a space that SACCOs are huge. And that is becoming evident from data we are now collecting, that they have had a huge role in terms of, funding this economy, various sectors. Don't forget that before we talk about SME, there is a social development space where you're talking about whether it's healthcare, school, and even building your house. Those are important before even I invest in a business. And SACCOs start from there before you actually move to. So they have a huge role and we'll be sharing more.
All right. As the regulator, from where you sit, what is the current liquidity state of the SACCOs that we have in the country?
One, I'll say that the SACCOs we regulate, which number 173 as we speak, account for their asset base is now going to 600 billion. And that accounts for about 3/4 of the total asset base for SACCOs in Kenya. And therefore the data we collect therefore can be a reflection of what the entire SACCO industry is in Kenya. As the data we collect on a monthly basis shows that SACCOs as lenders, like any diligent or prudent lender, are actually not holding on lending. It's not the best time to lend in a pandemic like this, given the certainty around this, and therefore they are holding back a lot of liquidity. Our latest reports indicate as at June we had liquidities of 40%. And when you look at March, we were at about 30%. Meaning they have a lot of liquidity, and that is what you call statutory liquidity, which is about 15%. They are well above that. But when you also look at the globe, where is the money going? You actually find cash. They have a lot of cash they are holding. Why? Because they are not lending. Yet you as a member, you are still contributing. But of course, there are sectors that are hard hit on a industry level. There's a lot of liquidity, but within that mix, there are SACCOs that are actually having it, rough. And these are some of the sectors, as talk of transport, public transport sector. There are SACCOs in that space. There is, we know with the restrictions, there's no movement. You talk of aviation, with all the, and now we are now starting to see horticulture also has been affected. But now the severity also matters. It's about the concentration of your members from those sectors. So what we've got, the reports we've gotten so far, including SME, because of the closure of small business, is that SACCOs, you find their portfolio would be maybe less than 20% SME or less than 20% those sectors. So again, you find there is variation, just like any other business, the severity. Yeah.
All right, Peter, let me take you back a minute, and you've talked about the fact that a lot of these SACCO are very liquid right now as you speak because they're holding back on lending. What is the requirement, and especially because when you look at banks, for instance, they have a threshold for this to be a registered SACCO. It has to have a certain amount of money in the bank, and especially for deposit-taking SACCOs. What is the requirement for that?
Thank you very much. Actually, like you like to say, deposit-taking SACCOs are actually quasi-banking institutions, and therefore they have requirements: liquidity, capital, and others. For liquidity, SACCOs are required to hold minimum of 15%. Okay, and therefore, when we say they are liquid, we are saying they are well above the minimum requirement. That is on an industry. You talk of an industry, it's liquid. But the question at the end of the day is, how about the individual institutions? And I would say there is about, I would put it less than 10% of the 173 who we have noted have liquidity below the 15%.
Okay.
Yeah.
All right, let's talk about how difficult is it right now for SACCOs, and you mentioned this, to lend, and the fact that we're seeing this holdback. For how long are they going to hold back on these funds as opposed to lending to their subscribers, lending to people who actually, they're SACCO members who are very in need of this money?
Well, thank you very much. Interestingly, SACCOs operate in a market economy where is a question of demand and supply.
Yes.
As much as members are, SACCOs are member-based institutions, they also expect you to put in an application through which they can respond. It's a no or yes or, and therefore, what we found is that, one, a prudent, rational member will not want to borrow because I don't know how far this pandemic will go. So if I had a project, or I was planning to borrow, take my child to university or such other needs, I hold back. Okay, so it's a demand and supply question. Most SACCOs you've talked to, they are saying they are doing less than 10%, 50% of their usual demand in a month. And therefore, that being players in a market economy, it is, a question of demand and a supply. Because if my business is down, I borrow, I'll have to pay. Okay, and if I don't pay, there is a security. I might lose my car, or if I'm guaranteed by my members, like it is typical of SACCOs, my friends will actually not guarantee me because they're also not sure. So I think it's those dynamics that are dictating. Okay, otherwise SACCOs, what they are doing, most of them is to push to lend short term. For example, if you are employed and they can see your salary is still coming, the sector they are taking the risk to give short term loans. Okay, and that's why you find that even with all that, the lending is still going on, but on what we call they are rationing. Which sectors are they lending into?
There's also the fact that whenever people are borrowing, it's either for consumption or for investment. From the data that you've been getting for the last 4 months, where are a lot of these SACCO members putting their money?
I would say that the data that we are getting, like as at June, what we are getting is that most of the loans that SACCOs have given is actually to go to land and housing. So very surprising for us. But the area we saw a big dip compared to, say, in March, because that's a good baseline too, is that the SME got 50% what they got by first of the year. The ratio was about 10%. They got about 5%, telling you that people are still taking risk, though it's not everybody who is taking the risk. It's also risk. As you borrow, you're also taking a risk as a member. So you have to evaluate, because the SACCO will also look at the risk that will you be able to pay this. So we note that sectors like education also got a big chunk. But land and housing was huge. Then you talk of the also question of refinancing, which to us is very interesting, because it's like people are now restructuring their loans.
Okay.
Stretching their loans, that's category. Refinancing, they are either, you know, saying, look, can I get within my current facility, can you
get an extension?
Yeah, can I get an extension so that I unlock, say, 100,000 to deal with my immediate needs? So that is what we have seen, that, land and housing still big. And you may wonder, Jimmy, why is this the case? I want to put some facts to you. That one, the Kenyan sacco industry is very interesting. It's not conventional model you find in many jurisdictions. The large SACCOs, actually 75% of the nearly 600 billion I talked about, 74%, which is about 3/4, is actually from public sector.
Okay.
Teachers are still getting their salaries.
Yeah.
The public sector, they are still getting their salaries. So even if I'm funding my business, I have the security of my loan is actually my pay slip, the SACCO will take a risk there. So what I'm seeing is that you'll find that the collateral, even though they are putting money in housing and land, you'll find that it is you and me who are salaried. They are taking your salary as a collateral to lend you into that. Yeah.
Okay, there's also the issue of non-performing loans.
Right.
This has been a thorn in the flesh of so many SACCOs that I know of, and the fact that whenever the SACCO is trying to get their money back, it ends up being ugly.
True.
How are we addressing this? How are we making sure that we're cautioning SACCOs, as well as at the same time we're also cautioning the borrowers?
Thank you very much. One, I think non-performing loans is not a problem of SACCOs.
Okay.
I think data across the lenders is actually showing that non-performing loans are rising.
Yeah.
And like you say, always, even the money lenders, you borrow, they say borrowing is a wedding. But when you're paying up, it's a matanga, like they say. And therefore, SACCOs being member-based, what we've done is during these times, particularly so that we talk about this time, is that one, we have given communication to them that to be very diligent and prudent to make sure that you are lending where you are sure you can recover your money, because you don't want to add good money after bad money. And therefore, within their policies, we have seen SACCOs tightening where they borrow. For example, incidences, you do a survey, you find we are not lending to SME. So I think what is happening is that we are seeing more diligent in lending. That's why 50% lend out that we are seeing. Two, guarantor mechanism works, but it's only when at a guarantor I don't keep my word that obvious the next step comes. But I think from where we are very careful, because we are very, in terms of what you call fair practices, fair credit practices, to make sure that you are still treated with dignity. And that's why when you are lending, you make sure that indeed I'm lending you something you can pay. But I think as always, there'll always be that few customers who will not, your financial circumstances will change. And then it becomes really ugly, because at the end of the day, what you want to communicate to the other potential borrowers is, I'm lending to you not SACCO's money, but other members' deposits.
Okay.
Not just money, deposits. And when the depositor comes, he needs his money. So the question of being ugly, it will remain so because we are trying to implement the policy to protect member deposits. Okay,
and there's also the fact that some of these SACCO have rogue leadership, so to speak. And I know for you as a regulator, you worked so hard to try and make sure that this is streamlined. How are we doing so far, and where are we in terms of going after this rogue leadership in SACCOs?
Well, one, Jimmy, I think that's a very strong term to use, rogue leadership. I wouldn't agree with you, because I think what you've seen is a few isolated cases.
Okay.
Because remember, who puts the leadership in office? It's you and me as a member. Okay, so if you are putting rogue people, you're also rogue members. Like they say, it's a democratic institution.
Yes.
But I think what is coming out is that one of the key policy goal of prudential supervision was to make sure that governance and accountability is enhanced. And I think that's part of the job every day we have to think about. And by and large, what you find in the SACCO industry is isolated cases. And therefore, you want to deal with that case as it is. Because is it abuse of office? Is it misappropriation of funds? Because what is causing that? Because by the time it's reaching members, it means their decisions, financial or otherwise, they have made wrong. So that now the core business of lending to members is being hurt. And I think that's an area we are very clear, because at the end of the day, we'll even remove you. And as you know, we've even gone further now to have an investigative capacity by partnering with the DCI, so that the criminal side of things, should we find those few cases, there are criminal aspects, then they are able to move in early enough to arrest the situation.
Okay, Peter, there's also the fact that we expect the global economy, and this is just from the data that we've been able to see, that we expect a certain level of recession after this pandemic. Now, in terms of recovery, what role do you think SACCOs can play to help these economies grow?
Thank you very much. I think SACCOs, like I said, being financial intermediaries, just like other lenders, banks and the likes, they have a critical role to finance recovery of the economy.
Yeah.
One, I think from a regulatory perspective, one of the things we are monitoring very closely is the severity of impact. Because I know members love having high dividends, but we are saying this is a year where you need to cut down on such. Reserve more so that your institution can have reserves, enough money to fund post-recovery. Two, I think, like we said, being intermediaries and institutions that lend to citizens. Then when you talk of stimulus package, the discussions going on right now is, can government channel, stimulus package targeted to certain sectors, whether it's agriculture or whichever, to these sectors, because they know the members who are most severely impacted. They become, and you can monitor easily, because SACCOs are, SACCOs, we say, you are the owner, you are the borrower, you are the depositor. So it's become very easy, and therefore they'll be a key player. And I think our wish is that the data we are collecting will be persuade, the physical managers of this country to actually know that they form a major role in terms of the recovery in impacting on the real economy.
And so going forward, we expect, even as we start the recovery process in the future, there's also the fact that a lot of members will feel disgruntled. Yes, I've been a member of this SACCO, but I'm trying to get X amount of money. Unfortunately, I can't. Yet this same SACCO is lending to other members. How do we address these issues, and so that all the members feel they're safe in their SACCO, they feel valued in their SACCOs?
Thank you very much. I think that's a good question, but I'll also put it in the context that, like I have said, you wear three hats as a member. You are the owner, you participate in the decision making. You participate, you save, and you borrow. And therefore, by and large, it's your ability to pay that will dictate. We cannot lend to you just because you are a member, or I do not expect a SACCO to lend just because you are a member. I lend you money you can't pay. So I think that question of being granted, it gets neutralized because the policies that we see SACCOs doing are equitable to everyone. At the end of the day, you dictate how. The area I know members will possibly, the concerns you expect is, low, subdued lending means less earnings. And we've also said non-performing loans are rising, and we have seen that from the data we are getting. That means you need to reserve more to actually protect the institution. So we are likely to see the area of concern that is likely to happen at the end of the year is that the earnings distribution, the interest and dividends we get, because a prudent businessman will not distribute big time this year. You are better off holding back. I better forego my 10% dividend, but my institution will lend me $1 million to revive my business, to resume school and all that. So I think that's a conversation that's going to happen as we move along as part of the thinking ahead.
And what we've seen, and especially right here in Kenya, is the fact that most of these SACCOs that we have in the country are agriculture-based SACCOs. And let's say we work in a certain company, we come up with a SACCO. What is the safety of these SACCOs after you leave this organization, after you leave this agriculture, and let's say you go into manufacturing?
I think I would say our SACCOs are diverse mix. Like I said earlier, that 75% of the assets or deposits are actually public sector. Then you bring in the what you call private enterprises, and then you have agriculture or open bond SACCOs. Now that, and then the mix of memberships from different backgrounds. You hardly see a SACCO even in the tea growing areas serving pure members. Within, you'll find that even within that space, they have now evolved not just to lend to the farmer, but they are value chain actors who lend fertilizer supply, processors like coffee, and they lend to the whole chain. And that's what we are noting agriculture SACCO doing. That we cannot just say we are serving farmers. This farmer is operating a matatu. He is operating the shop in the the sub-county. So there are so many dynamics that the deposit-taking circles with today, like I said, are quasi-banking. Okay. They don't discriminate you because you are a tea farmer or dairy farmer. No, they want your money.
Okay.
And therefore, that is something that we have seen very positive, and that's why we evolving to even fund agro processors. So I think they are looking at especially for agro-based circles, we are seeing move towards looking at the whole value chain within the community that you operate.
Let's talk about diversification for a minute, and this is with regards to the deposits that are in the circle. We've seen a lot of these circles investing in land. This is a land owned by Circle XYZ. But how then, going forward, can we diversify? We want to see circles investing at the NSC.
Thank you very much. One, I think there is a notion circles invest a lot in land, but which is not supported by data.
Okay.
A circle is a financial institution. It collects deposits and lends. So when they lend to you, you buy land. The asset in the book is a loan, not the land.
Not the land.
So they fund big time because they support your development. You want to develop. So the issue of land. But we have also seen them, some of them having subsidiaries to invest in land, and that's the space. Now, what we are noting, if you follow our data, our published reports, what we call loan to deposit ratio in circles is over 100. Okay. Now, and remember, they are well diversified because they are lending to individuals. Okay. The concentration to one person is very minimal. You can't lend more than 20% of your product to one person. So the question of diversification is actually achieved through the members who are investing in different sectors. But when I say the loan to deposit ratio, it means that diversification in terms of assets these institutions are holding for today is not a priority, because if the demand for loans for me, I'm able to lend out my deposits and even get to capital reserves, then it means there is a huge demand for credit. And that's a positive thing for this economy, because the conversation at macro level is the SME and individuals can't access credit. Okay. But in circles, the demand actually exceeds the funding side. So I think for us as a regulator and from a policy persuasion, what we are looking for is diversifying the funding side. How do we mobilize more deposits to actually fund this huge demand, so long as they are funding economically viable activities in the economy? Okay,
let's talk about joining a circle. And I'm sure as a regulator, there's some rules that you have set in place. What are some of the things that I need to look at before deciding this is the circle that I want to become a member of?
Thank you very much. I think from a regulator perspective, one of the things we do every beginning of the year when we license is to publish the names of circles we have licensed and we regulate. Okay. It is made deliberate to inform you and me and members of the public.
Where can we sort of find this list of regulated circles?
This is found in our website, SASRA. You Google SASRA, you'll find our website. We have the licensed institutions there. That's one. But also, to look for is look for which circle is actually in my area of relevant, because there are circles for doctors, there are circles for accountants, there are circles for business community, so for public sector. So do I fit? Because that means from guarantor perspective, I can get people who can guarantee me, and that is critical, and you can get in from me because they have a history. Circles, if it's teacher circle, they are specialized. So that, and I'll tell you that circles that have diversified, for example, then the diversification also means you are diversifying risk. Okay. Like I said earlier, the challenge today with COVID we are noting is that circles that concentrated members in, say, public transport sector. That means the risk concentration in that sector, or aviation. So the question of diversification becomes critical. So we invite members that even if it's a teacher circle in your community or public sector circle, or join it, because together that risk, I'm coming from business, I'm coming from employee, that diversification. But more importantly, always ask them, are you regulated? Who is a regulator? Okay. Who is your regulator? That's very critical. And this is very important to emphasize, because you recall last year, actually not last 2 months, our CS gazetted the regulations to actually bring more circles under SASRA. So all circles that have deposits of 100 million and above, regardless of whether they are operating FOSA, that's a deposit-taking business, will now be regulated. And that level of oversight, because what happens is that in the cooperative sector, we have cooperatives. And cooperatives is like a company. You do the business you want. But when you are doing business or deposit taking or collecting money from that, the business regulation changes. Yes. So that is where these regulations have been gazetted by CS. And therefore, increasingly, more SACCOs will actually come under our oversight.
All right, let's talk about the issue of recovery, and especially for SACCOs, and just trying to get these numbers, the number of depositors coming up, the number of members coming up. Do you have a plan going forward after COVID?
In terms of...
just trying to make sure that there's a lot of goodwill out there in terms of people joining SACCOs, and also just to try and push up the numbers, because, again, there's a category, and we'll talk about this in a minute, there's a category of people who are asking, why do I need to join a SACCO?
Thank you. Now, I think as a regulator, our primary job is one, to make sure that SACCOs are sound and safe for you to save.
Yes.
The question of now going to recruit members is for the SACCO managers to reposition themselves. When you regulate institution, is you to align the SACCOs now to align their strategies digitally, the youth, and the like. Because the study we have done is that we have realized the membership in SACCO is actually a normal curve. Youth to old, and what we're asking SACCOs to look at the youth. They form near 50% of our adult population. Do you have appropriate products for them? Then you go to the other end of people who are past 55. Those are people who are able to take risk. They have saved enough. Why are you allowing them to drop? So I think from where we sit, we'll continue. There are a number of policy measures we are taking. A question of, deposit guarantee fund is at the discussion right now, which is a safety net. Question of what we are calling shared digital platform, because we know there are SACCOs out there in far-flung places that cannot invest in technology that large SACCO in Nairobi can access. But we want to have those SACCOs, through what you call shared digital platforms, encourage them. We have drafted a legal framework so that that person in Busia, for example, can access the same digital finance channels that a SACCO in Nairobi can. And what does that mean? It means you are expanding their reach, and you are not domiciled necessarily where you are. I could be coming from Busia, but I'm working in Nairobi, I can save. So as a regulator, what we work is to develop the market and to create the confidence. And any barriers, what you call market failures, market barriers, are addressed. The question of convincing you to join SACCO A or B is for the SACCO managers.
Okay, there's also the fact that I am a member in a bank. I have my Bank X, probably, that is where I bank, and I'm also a member of a SACCO. Why should I come and get a loan from the SACCO and not directly from the bank?
I think one of the policies in terms of financial sector development in Kenya is to have a diversified financial sector. That's why we have banks, microfinance, commercial banks, microfinance banks, and SACCOs. All of them is for you to choose. And you find that by practice we are multi-banked, and even we go to money lenders, and they are playing a role in the economy. And therefore, for us as a SACCO regulator, is to position SACCOs as stable and sound institution and dependable. Because why? You are the owner, you are the depositor, you are the borrower. So you are actually able to influence the lending practices. You're able to influence deposit practices, and that is for your own benefit. So I think the SACCOs globally stand out because their objective is central, is developing you. It's not about declaring high dividends at the end of the year. There are no shares to appreciate. No. It is, am I helping the member build wealth beyond consumption? That is the ultimate question. And what we are encouraging SACCOs, last year, we launched the report on sectoral lending. What the conversation, we did two surveys, sectoral lending as well as demographic survey. We wanted to unpack this myth that SACCOs serve the old. It's not true. They serve the whole cross-section. Now, on terms of lending, we realize we are mapped out about 8 sectors of the economy, from housing to agriculture to trade to health. They play in all these space, and that's our joy. The more we give that information, the more you as a potential consumer will know, I can actually get funded, as a potential manufacturer, can actually get funded by my SACCO. And the beauty about SACCO is that they are local community based, whether it's community of professionals or the like, and therefore they respond to your needs very easily. So I think positioning SACCOs I would say Kenya is leading in Africa in terms of SACCOs. It's among the, I think, 7 globally, and therefore for us as a regulatory agency is to build on that success to make sure that you Kenyans are more, they have trust in their SACCOs, and that's why we find penetration level right now is about 24% of adult working population are actually in SACCOs.
Okay, so when you look at the banking sector, for instance, you have the tier 1 bank, tier 2 banks, and the rest. Why can't we have a rating system for SACCOs as well?
One, I think what we have, if I could comment on the banking, is not necessarily a rating system. It's a classification based on market share.
Yes.
Okay? Apparently, if you check in our report, Jim, you will find exactly that similar thing. I can tell you, as we speak today, there are 31 SACCOs with assets in excess of 5 billion. They command 70% of the market share. 30.
Yeah.
That tells you the same thing you hear in the banking, concentration, few banks large, serving a large. So that we have that information. Now, the fact that you are classified tier 1, because what we have is we have tier, 3 categories. We have large, medium, and small. For us, small is 1 billion and below.
Okay.
Medium is over 1 billion but less than 5 billion. So that is there. We've always used that category for in our published reports, which are found in our website. We call SACCOs, we call them annual SACCO supervision report. I think we are releasing for 2019 in the next 1 month. Yeah.
All right, now indeed we will be looking forward to that report. Now, my final question as we wind up this interview is the fact that for a lot of SMEs, they're struggling financially. A lot of startups are struggling financially. How important would it have been if, let's say, they were members of a certain SACCO? How easy would it have been for them, and why do they need to join these SACCOs in terms of what do they get in return?
Thank you. Like I said, SACCOs, the SACCO we see today is very diversified.
Yes.
Why do I say that? I'll start, you're a young person, I join. I buy my house or buy a car. The next thing is a side hustle.
Yeah.
That's a small business or a micro. So I go to my SACCO. What has been happening is that we've not been collecting data to actually see our SME. And that's why today I can tell you the first quarter they gave about 5 billion.
Yeah.
This quarter I can see a decline because we are now tracking data by sector. So what for the SME, I say the beautiful thing is, like I said, is the nature of SACCOs. I'm the owner, I'm everything. So any entrepreneur join the SACCO early. You don't know, like you rightly said, that business is like a bus.
Yeah.
You don't know when you will start it.
Yes.
So by being in a SACCO, I'll even borrow money and I'll not say what I'm going to do is development, but I go start a business, and therefore you develop. By the time now you are saying I'm in this sector, nobody knows, because times trend says that when I say I'm going to invest in a matatu, for example, it's a risky area. But today we have seen matatu SACCOs. We have them. So I would say SACCOs are already playing in SME. Yeah. I would encourage entrepreneurs out there to actually look out for them. They are offering business loans in huge amounts. And that's how we wrap up this session of Business Hour this week. Let's do this again same time, same place next week. And remember, every hour is Business Hour.